Hooty hoo, all my stock market gamblers. Here we are again. It's Friday, April 23rd. Man, these weeks, they go by fast, go by real fast. What's going on in the markets? We got the Dow up 100 points today, but that's not where the action's at. Action is in Bitcoin. Bitcoin, have you seen Bitcoin lately? Drop below 50,000. It was up at 65,000, now below 50,000. At the time of this recording, about 49,000, down about $5,000. Wow, a big drop, right? Is that a buy signal? Where do I think it's going? Well, I think it's going to 100,000. I do believe that now. It may go to 10,000 first. A little caution right there. Now, what did I do today? And why did Bitcoin drop? Let's talk about that first. Why did Bitcoin drop? What happened? Well, Biden came out and said, hey, capital gains, you got to pay your capital gains. A lot of people have these big capital gains in Bitcoin. Okay, so he's going to raise the capital gains from 20% to 40%. That's just the feds. Okay, if you live in a state like me, like California, add another 15% for the state. You're up above 55%. Okay, in other words, your gain in Bitcoin, they're going to take more than half the profit. You put up all the risk, they get the majority of your profit. So a lot of people go, I don't like this plan. I'm dumping it, I'm selling it, I'm out. Now a lot of people think they can avoid taxes on Bitcoin. Government can't find my Bitcoin, let me tell you. One of the questions on your tax return is, do you own Bitcoin? Try lying on that one. If you want to see jail time, just try to lie on that one. They want your profits. They want half of it, over half of it. So Bitcoin came way down. Dropped about 5,000, trading around 49,000. I do think it's going to go to 100,000. But Bitcoin it's notorious for 80% drops. 80%. Done it 5 times already in 10 years. 80% drops. Right, 80%. Think of that. 60,000 becomes 12,000. Okay. That can happen. You get this volatility with Bitcoin. But what's this good for? Well, where was the top measured in Bitcoin? Bitcoin top was when Coinbase became public. Coinbase became a publicly traded company. Coinbase marked the top. It was 65,000 right about there. And now it's below 50,000. And what did Coinbase do? Well, let's think about it. Coinbase came out at $381 was the opening price. Okay, they set it for $250, but it came up at $381, shot up to about $430. If you had bought on the first day over $400, well, it's trading today around what? Around $290? $290 from $430 to $290. You'd be down about 30%. 30% in 1 week. That's why I do not like these IPOs. I do not like to buy them on opening day. Now, what I did today, I bought a small position in Coinbase. Now, I think Coinbase is going to do a little bit better than Bitcoin going forward right here. Okay, Bitcoin. Got that tax problem. Believe me, no one's selling their Coinbase because nobody has any gains. They've all got losses. They don't want to sell these losses off. It just became a public company. So down here below $300, I have a small position in Coinbase. Small position. I think it's going to do better than Bitcoin. Now, what I want to talk today about is who's the greatest trader of all time? The greatest stock investor of all time. A lot of people would say, oh, maybe Warren Buffett, maybe Ray Dalio, maybe George Soros. There's a lot of, you could fill in there of all time greatest traders. Okay, so let's take a look at Warren Buffett here. Warren Buffett, he's 80 years old. Most of his trading career happened in the last 40 years. So from 1980 to 2020, that's about 40 years, right? Well, what happened in that time? Let's take a look at 1980. 1980, what was the government debt in 1980? You could measure it in billions. It was only about $800 billion was the debt of the whole government in 1980. $800 billion. We're at 28 trillion. So you got 800 billion to 28 trillion. All right, where were interest rates in 1980? In 1980, interest rates were actually hit 20%. 20%. If you put a dollar bill into the bank, they give you $1.20 in a year from now. 20% interest rates. It was crazy. It was good times. What did a house cost in 1980? About $40,000. $40,000, and you could get 20% on your money in the bank? Wow, interesting, right? Okay, now the minimum wage in 1980 was only $3.50. $3.50. Now today it's, I think national, it's $7.50. Going to raise it to $15 though. Okay, all right. So what have we got? We had about $800 billion, and then we printed $28 trillion worth of money. $28 trillion. Who was the biggest beneficiary from this money printing? Was it the poor people? Did they get rich? Did the poor get rich? Did the middle class, did they become wealthy from it? Or did the rich people just become more rich? I would argue, and I could argue, I like Warren Buffett, but I'd argue that he was probably the biggest beneficiary of the printing of money. He was the biggest beneficiary. Because where does that money go? It goes into the stock market. It finds its way into the market, stocks and real estate. And I would argue that Warren Buffett was the biggest beneficiary of these bailouts of the QE programs because he owned a lot of assets. He owned assets that inflated. Now, I got nothing against Warren. I'm just saying that he was trading his whole career in a market where interest rates were 20%. Where are they now? They're down about zero. So interest rates straight down, money printing straight up. It's kind of like baseball, like when they were having those home run derbies, Sammy Sosa and I don't know, Mark McGwire, and they were just the Bash brothers. The ball was flying out of the park because they were on steroids. Okay, Warren Buffett and the recent traders of the last 40 years, they traded a market that is on steroids. Steroids from the government printing money, the government keeping interest rates artificially low. So how did they get so rich? Well, they were the beneficiaries because they owned the assets. Now, who did this destroy? Who's got to pay this $28 trillion? Well, you and me, the middle class, right? Poor people, they were always going to be poor. They're poor before, they're poor now. And they're going to be really poor because they're not going to be able to eat soon because of inflation. Okay, so is Warren Buffett really like the greatest trader, the greatest investor of all time? Well, in my opinion, absolutely not. He's playing in a juiced up market, a market that is fueled by money printing. $28 trillion. A lot of it goes into his pocket. Me and you pay for it. That's right. The middle class pays for it. Now, who do I think was the greatest trader of all time? I'd like a guy named Jesse Livermore. Jesse Livermore. This book, great read. World's Greatest Stock Trader. Jesse Livermore. This guy lived born in around 1870s and died around 1940. But the markets he traded, they weren't juiced up. Now here's another thing. He was trading his own money. Not like these hedge fund guys today. Look at Warren Buffett. Most of the money he trades isn't his money. He just takes a percentage of it. He doesn't have skin in the game. This guy, it was all his skin. Jesse Livermore is the greatest trader of all time. He became by today's standard, probably topped out around 15 or 20 billion in today's money. Now, he was up and down. He was a short trader. He was blamed him for the crash of the Great Depression because he was short at the time. He made his money going up, going down. I think he was the greatest trader of all time. It's a great read. If you don't have anything to do this weekend, pick up a copy of Jesse Livermore, the greatest trader of all time. Pick it up, read it. But my point is that the modern day traders, they're just beneficiaries. They take your money, They put it into the market, so they have a lot of assets, like these SPACs, like the Chamath SPAC. I like Chamath. He owns the Golden State Warriors, co-owner of the Warriors. Okay, but he takes all of your money and then he puts it in a SPAC, then he goes and buys a company, and then he takes a 20% take for himself. Is that really trading? Is that trading? That's not the trading I'm talking about. If you want to be the world's greatest trader, take your own money, go out there and prove that you know what you're doing. Prove that you can go to the upside. Prove that you can go to the downside with your money, not with other people's money, and then taking their money. The poor, the middle class, they're getting poorer. Middle class is shrinking down to the poor level because of things like SPACs, because of things like stimulus, because of the printing of money, because of the lowering of interest rates. Now, what do you do here? Once again, this is why I buy gold and silver, because what do you think? I think they're going to keep printing money. Now, you say, well, Mike, yeah, they're going to print money, but they can't lower interest rates. Interest rates are near zero. Well, believe me, my prediction is that we will get interest rates below zero. That's right, below zero. You put money in the bank, bank's going to take your money. That's right. You know how they're going to do it? By getting rid of cash. Cash is going away. People say I'm crazy for saying that. I don't think I'm that crazy. Get some gold and silver. Today, once again, bought some Coinbase. Do I like Bitcoin here? I think Bitcoin will double here, but I think there's just too much downside risk still. You wait till it gets down to the 30,000 range, then it gets really interesting. That'd be a triple up to 100,000. I do think Bitcoin's going to 100,000. I just think it has a lot of downside risk. And this volatility in the Bitcoin is good for Coinbase. Coinbase below 300, a small position I bought today. Bought it around 290, small position, small. It's just a gambling thing. I am a stock market gambler. So if you like this stuff, give me that thumbs up. Hit that subscribe button. I'm Tall Mike. I hope you all have a great weekend and subscribe so we can talk again next week. Bye-bye now.